Hi, welcome again to another edition of Market Analysis for today, January 15th of 2025. I'm Gio Bencourt. This is a recording done by Vantage Markets about 2 hours prior to the U.S. session open. And we're going to be having today the CPI reading coming out. That's going to be quite interesting to see. The consensus is to be the same as last month, 0.3% month over month. Now, should we have something higher than that towards the 0.4%, which is the highest range of the consensus, we'll most likely will be seeing some spiking on the dollar index and making that dollar index obviously putting pressure on other commodities such as the currencies and metals, making things more expensive for importers, foreign importers. So things will obviously be moving today. Now, should we see something less hotter than expected towards the lower range of the consensus, 0.2%, then we'll probably see a decline on the US dollars and a rally on gold currencies. So keep that in mind. Let's see what we'll be looking at as far as the index goes. Stocks, obviously, if the CPI comes in hotter than expected, then we'll be seeing some of the technical stocks like the Nasdaq seeing some sort of a pressure, obviously because cash flows will get more expensive, implying that interest rates will probably increment or stay the same. So let's see for today's market fluctuation, what could we expect? The levels that we have been seeing, that we've been following throughout the week since this low on Monday, rerunning of that 50-day moving average, hasn't really been broken, and so I'm going to keep them the same, just a tad adjustment so that we can obviously be right on the line for the first level of support. As far as resistance, we're going to keep the same ones. So expect volatility coming when the numbers come out today. That's the Nasdaq. Let's take a look at the S&P. So the S&P has been making green days since that low from Monday. So let's use, in this case, the 50-day moving average as our first level of support and that swing low as our second. As far as we see going for resistance, let's use 59.25 and the 20-day moving average within the Bollinger Bands as our second level of resistance. So again, we were expecting for all the indices to be closing in the red, indicating that we have entered a bear market, but that has not been the case. So not as far as for the S&P goes. Then we have the Dow Jones Industrial, which is also making a comeback. So 43,500-ish is going to be our first level of resistance, and then 43,250 around that area. The market right now is between the 50-day moving average and the 20-day moving average. All right, so we're seeing that happening right now. So they are acting as dynamic supports and resistance for us. So let's just keep using the same level that we had previously for it and expect obviously that volatility to be happening here. Now, crude oil was coming off. It did an inside bar yesterday. Okay, now it has been. It was doing from last week, since last week, 3 consecutive green days. Now we are on our second lower day. But usually this type of pattern inside bar, it suggests a reversal pattern. So that, how much of a reversal are we gonna see? We're seeing that much right now. Obviously, we wanted to be able to come and analyze how much of a retracement then that would be. We use the Fibonacci retracement tool, and we want to measure this whole this whole movement. And check it out. It is said that 0.38% is a normal, healthy retracement, where if market is going to continue its trajectory, its previous trajectory, which is upward, then it will fluctuate, it will reverse, it will retrace towards this level, and then from here rebound and continue. Now the golden ratio is 0.618, and the golden ratio, the Fibonacci, that Fibonacci ratio implies that everything comes to it. So should we see a deeper reversal, then we'll be contemplating this level here. So therefore, today we're going to be using those levels as support. The first one and the second one. Okay. Now, we do have, obviously, also today the reading from the EIA. So we got to expect, wait on that reading, so you can see what will happen. So expect volatility in this asset. Nat Gas is just ranging. It's doing the same. It's within yesterday's trading range. So let's see if it's just waiting for that CPI number that comes out. Basically, everything it is. And then we have gold. Gold is looking to fluctuate to the upside. Let's use this upper Bollinger Band as the first level of resistance, and that 2710 as our second. I'm going to be using basically for the first level of support this level right here, 60, and the 20-day moving average, our second one. This we will definitely have volatility moving here. If it's hotter than expected, you'll see that the dollar index will most likely increase, and then we'll probably see a reversal. So we'll see gold trending lower on a stronger dollar. But if it's the other way around, and we see the dollar index, we see a better than expected CPI reading, that will imply, obviously, interest rate cuts. So the dollar index will fluctuate to the downside, and we could probably see the gold moving higher. Then we have here silver. Silver is also just ranging. I'm going to bring down the first level of resistance to the 50-day moving average, and then I'm going to use this swing high from last week as our previous level of resistance. Support initially is going to be this double bottom here. Twice, it touched it twice, and we got to leave this here as well. So it all depends on the CPI number, volatility, how it will be applied. Okay, well, copper is making higher highs and higher lows, entering a bearish market. So initially, I'm going to leave that same level of resistance in 440 as our second target. Then support, let's just use this level right here and the 50-day moving average as our probable second level of support for copper. And also volatility will determine direction of it, the CPI reading. Then we have Bitcoin. So Bitcoin, after tanking on Monday, it has recovered itself. So let's see if today's scenario will bring it higher. So let's use this level right here as a first level of support, and then the second one could be this one right here. We could say that the swing low. Bitcoin does move by thousands, so that's why I'm giving such wide ranges. And the second one will be this one right here. So let's see. Initially, obviously, as the market opens, we most likely will fluctuate across this level. I mean, you could use 100,000 as that probable level of resistance, the target. Okay, which makes sense. Let's just do that around here. All right, so that's what we have. Now, the euro. When it comes to the euro, we've seen how the euro fluctuated to the upside since that swing low from Monday, and it's looking today that just to reverse some of that movement. And it's obviously also whatever the dollar is will do is going to affect the euro. But there's one thing that I missed out on bringing up about crude oil. So there's a correlation, an inverse correlation between the euro and the crude oil. So when that correlation is inverse, so you see that how crude oil is trading lower, and you'll see that the euro should be trading higher. But there is that correlation. But if you look at this day yesterday in comparison, you'll see that that's the case. Okay, it's not all the time as such, but there is one. So keep that in mind. As far as the fluctuation for today, again, we'll see the what the CPI brings to the table. Pound is finding its footing, is making a low, a bottom at 121. It's just ranging right now. So let's use the 20-day moving average as our second, and then 123 psychological value for the pound. And the dollar index is the one that we're going to be seeing moving a whole lot when that number comes out. So let's leave that swing high as our resistance and the 20-day moving average as our support. Let's see which way this will take off. That's it for today. Have a great trading day.